This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Germany has started filling the huge Redden gas storage facility abandoned by Russia's Gazprom, the site's state-appointed manager said on Thursday, as Europe's biggest economy looks to guard against the risk of Moscow turning off supplies. Russian gas is vital to Europe and Germany in particular. But supplies have been thrown into doubt by Western sanctions over Moscow's invasion of Ukraine and a looming deadline set by Russia for payments in rubles, which most buyers have rejected. Gazprom last month ditched its Gazprom Germania business, including Western Europe's biggest gas storage site at Redden, as diplomatic relations deteriorated.
OPEC Plus agreed on Thursday to another modest monthly oil output increase, arguing that the producer group could not be blamed for disruptions to Russian supply and saying China's coronavirus lockdowns threatened the outlook for demand. Ignoring calls from Western nations for accelerating output hikes, the group agreed to raise its June production target by 432,000 barrels per day, in line with an existing plan to unwind curbs made in 2020 when the COVID-19 pandemic hammered demand. Thursday's meeting of OPEC Plus, made up of the Organization of Petroleum Exporting Countries and allies including Russia, was held amid surging oil prices.
Moving on to the top news in the energy sector.
Emboldened by an oil price surge since Russia invaded Ukraine, Iran's clerical rulers are in no rush to revive a 2015 nuclear pact with world powers to ease sanctions on its energy-reliant economy, three officials familiar with Tehran's thinking said. Last year, the Islamic Republic engaged in indirect talks with the United States as a route to canceling U.S. sanctions that have gutted revenues and dramatically worsened economic hardships for ordinary people, stirring discontent. But the talks have been on hold since March, chiefly over Iran's insistence on Washington removing the Islamic Revolutionary Guard Corps, IRGC, Tehran's elite security force, from the U.S. Foreign Terrorist Organization, FTO, list.
Top U.S. shale producers on Wednesday reported blockbuster first-quarter profits and most poured cash into higher dividends and share buybacks as oil prices churned along at the highest levels in years. Pioneer Natural Resources posted a five-fold jump in first-quarter profit and raised its dividend, while earnings at Continental Resources more than tripled. Shale gas producer Chesapeake Energy initiated a $1 billion share repurchase program after raising its free cash flow outlook. Producers were prioritizing shareholder returns over new spending on production even as Western sanctions on Russia sent crude prices to 14-year highs during the quarter. Investors had demanded better returns after years of capital spending turned shale into a Wall Street pariah. Next, we have the top news in metal markets. Gold prices rose more than 1% on Thursday, a day after Federal Reserve Chair Jerome Powell allayed investor fears that the U.S. central bank might embrace bigger interest rate hikes to rein in soaring inflation. As expected, the Fed on Wednesday raised its benchmark overnight interest rate by 50 basis points, the biggest jump in 22 years. However, Powell told reporters afterwards it was not considering 75 basis point moves in the future. Spot gold was up 1.1% to $1,901.30 per ounce by 8:21 a.m. Eastern Daylight Saving Time, 12:21 GMT, having earlier hit its highest level since April 29. U.S. gold futures climbed 1.7% to $1,899.60.
Copper prices rose on Thursday as the U.S. Federal Reserve tempered expectations for larger rate increases in future, reviving appetite for riskier assets. The U.S. Central Bank on Wednesday raised its benchmark overnight interest rate by 0.5 percentage point, the biggest jump in 22 years, to fight soaring inflation. Fed Chairman Jerome Powell, however, sounded a less hawkish tone than some had feared in his accompanying comments, and said the U.S. Central Bank was not actively considering a 75 basis point rate hike.
We will now look at the top news in the agricultural sector.
Indian mills have signed contracts to export 8.2 million to 8.3 million tons of sugar in the current year without government subsidies, a leading trade body said on Thursday. Mills have so far produced 34.2 million tons of sugar in the current 2021-22 year, up from last year's 30 million tons, the Indian Sugar Mills Association said in a statement.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.